we've got a positive economic outlook really playing its role in lifting sentiment over on that end. On the economic front, we know that under Kenya's Vision 2030 program to become a middle income country, the economy has to grow 10% annually until 2030. Now, we've seen data reveal that investments topped 156 billion shillings last year, but to grow at 10%, it needs 200 billion shillings in investment per year. Is that feasible, in your opinion, with the kind of growth story that the country is telling right now?
Well, it is feasible. The question is, where are these funds going to come from? The thing is, the government can only do so much, and donor funding can only do so much. So a lot of this development momentum has to really come from the business community in Kenya. We are looking at a very positive and, there's an air of optimism right now in the business environment. Hopefully we are not going to have any other shocks that hit our economy. But without those, I believe that the Kenyan business and, investment environment is actually looking towards more spending. We are seeing interest rates on the, on the down, and we are also seeing investment on the up. I think we saw yesterday that there's even more consumption of energy. So, it seems that Kenyans are actually stepping up, and probably now with the new constitution, there'll be a more business-friendly environment.
So that the broad-scale investment allure, so to speak. Let's look at the allure into equity specifically, where we've got analysts expecting corporate earnings to rise about 25 to 35% this year, rising to an average of 40% next year. Are you as optimistic about corporate earnings within this context?
Well, the banking sector has already led the show, and we've seen most of the banks announcing, big shifts on the rising profits, and usually the financial sector is the signal. Well, of course, we've seen some opposing signals. For example, we saw Access Kenya not doing very well, but Scan Group did have done very well over the first half of the year, having posted over 35% increase in profit, and they are still expanding, meaning that there's quite a bit of advertising spend, and that means that businesses are looking to expand their horizons. I think at the moment there's that air of optimism, as I said. There's quite a lot to be done yet. We are still to recover, but I believe it's possible.
Well, we were unpacking Kenya Re's outlook a little earlier this week, and Ali Khan Sachu of Rich Management saying that he doesn't quite see Kenya Reinsurance achieving double-digit growth as the company itself has forecast for this year. He said that he would need to see it happen first. To what extent are we seeing market exuberance rub off on players like Kenya Re and possibly them setting up unrealistic targets?
Well, for example, Kenya Re has had their issues, their boardroom wrangles, and I think that's not going to play to their advantage. I think they're still repositioning themselves and restructuring, so the chances of them actually hitting double digits are actually doubtable. Well, I believe they're just being optimistic, and I feel that more of this growth is going to come from the commercial banking sector. We are yet to see the insurance, and of course Kenya Re being a reinsurer, yet to be in that area where we are looking at big growth.
Yet we saw the board of directors recommend a dividend payout of 0.5 shillings per share. Prudent move, or in your view, should they be conserving cash?
Well, I would rather they had, but at the end of the day, they need to signal to the investors that because a lot of issues on the investment side are about how much value an investor is getting in what they're holding. And in Kenya, for example, you find that when a company doesn't pay dividends, it doesn't rub off well on investors' books, and so they do need to at least, throw something at the investors to keep them happy, and I think that's what they were trying to do.
Having said all of that, a pick in the insurance space seems to be a Jubilee. That's where the consensus lies if one had to be chosen out of the insurance players. It's trading at a PE of 9.5 right now. The company out with half-year results earlier on. What are your overall impressions of Jubilee at this stage?
Undervalued, very good business model. They have a regional presence. I believe they are quite strong. And in terms of when you talk about the listed insurance companies, I do believe they have actually the strongest potential for growth at the moment.
In the meantime, Kenya's main power producer, KenGen, looking at selling a 19% stake to a strategic investor and using the cash generated to invest in energy generation projects. Market reaction to that news that emerged late yesterday afternoon?
Well, it should. KenGen are actually at the moment servicing public infrastructure bond, which they did at about 12.5%, and that's quite high when you consider that recently we've seen interest rates going down on the fixed income side. The other thing is KenGen still has issues. They still haven't brought in a lot of value to the market after the IPO, and therefore they probably feel that coming to the market at this point in time isn't their best bet, and that's probably why they're looking for a strategic investor. They'll most definitely get one. I think the energy sector is an area to invest in.